Ladies and gentlemen, here are we again with our interview with Egon von Greyerz from Matterhorn Asset Management. There are some exciting topics to cover, but first of all, hello Egon, how are you in those insane times? They become more insane month by month, right?
Yes, and we haven't seen the beginning yet, Jan. It'll be a lot worse than this. I mean, they are insane because they're still volatile at the top of the market in stock markets, etc. But they will become insane in a way that people can't believe when they start crashing. Whether that starts now or in a few months' time makes no difference. It will happen.
Egon, last week we saw the Dow Jones dropping by 600 and something points. The reason was discussions or broken discussions by the US and China about a trade deal. So it seems we are running into a real trade war. In the same time, Bitcoin and other cryptos recovered. Do you think this is maybe a sign of a capital flight, or that goes into cryptos, or some strategy to distract people from going into the precious metals? I will mention this later, but I don't consider the cryptos a real alternative to the precious metals. Do you?
Well, first, if you talk about the trade wars, yeah, that is really serious. And of course, the market goes up and down on any news. So it went down first on the fact that they're not getting to a solution, and then when they went up on some hopes again. But I think the trade war is serious, and I think America is the loser here. Sure, everybody loses in a trade war, and the whole world loses, because when there's trade war and trade barriers, the world trade goes down and everybody suffers. But of course, these are two of the biggest trading nations in the world, so they will both suffer with the rest of us. And I don't think, it doesn't look like they're going to come to a solution. Of course, China has the biggest weapon of all here. America can make them suffer with not taking their exports or putting high duties on them. But China, of course, has the fantastic nuclear weapon of 1.11 trillion US treasuries. And if they really want to start a war, they can dump these treasuries. Of course, it wouldn't be in their interest either, because it would mean that the value of the treasuries will come down, and so will the value of the dollar. But at the same time, they might do it also for the reason that they want to sell dollars to keep their yuan higher and buy yuan. So therefore, I could see them doing it. I could see them reducing it in a major way, just like Russia has done. I mean, they got rid of the US treasury. So that is a big weapon, and that in itself could be the catalyst for a collapsing dollar and collapsing markets. Now, coming back to Bitcoin, yes, Bitcoin, China has always been the biggest trader in Bitcoin. So this is when it went up all the way from virtually nothing to $19,000. It was China. The big volume of Bitcoin trading is in China. So this is, as you rightly said, a way of capital flight from China. And as we know, China has now become very tough on capital flight. So this is one way that the Chinese see that they can get out of it. But I'm sure that they might be caught there one day also. So that's why Bitcoin has gone up, and gold has really not gone up yet at all. Gold's time is still to come, of course.
Egon, in one of your recent articles, you showed a very interesting graphic that I got a more reader-friendly version of it. I will show it in a second. Here we see this graphics that I just mentioned, taken from one of your latest articles, and it shows us that the daily trading volume in gold exceeds this of the S&P, not to mention the mine production.
Yes, I think you made some changes, and we lost the values there. But the daily trading gold value is 265 billion. We can't see that on there, but that's...
Yes, the value is here on the left scale.
On the left, okay, yeah, fine, you have it there, yeah. So that's about 265 billion. Which is twice the trading level of the S&Ps. Now, just to compare that to gold mine production, which is on the right there, 330 million. Now, so that means that daily trading in gold, which obviously is primarily paper gold, is 850 times gold mine production of gold. That is just remarkable. And as you can see, also the daily gross trading in gold is twice that of the S&Ps, which is one of the biggest markets in the world. So here we're looking at a casino where gold is traded virtually more than anything else in the world. And in my view, a lot of that trading is to try to cover the short positions that central banks have and that bullion banks have in order to manipulate this market and to do for the paper trading. So I think that central banks have either disposed of or sold a lot of their gold or leased a major part of it, and then they're trying to cover this up by very active trading, frenetic trading in the futures market. So I think that at some time this massive trading casino will blow up, and of course at that point anybody who holds paper gold will not get any delivery whatsoever of physical gold. So an interesting picture, very interesting.
I found it even in the silver markets, it's even worse than that. In a previous interview I mentioned that the OTC trading volume, I'm not sure if you saw this, I took it from the CBM group, and they outlined there in trading volume on the OTC market from over 4 million tons of silver. Can you imagine this?
Yeah.
So the precious metals, they are probably the most manipulated commodities or assets in general on the planet.
Definitely, as we said, in relation to the amount produced physically, it's just massive, this market, and that is a sign to me, a warning sign, and that anybody who holds paper here will not get any payment at all, and they certainly won't get any metal, silver or gold.
And if we consider the geopolitical situation in the Iran-US crisis, Israel, you have conflicts all around the world, and that should lead to the people or should make the investors a bit more cautious and aware of the danger that are facing. But still, the stake of gold they are holding in their portfolios is absolutely ridiculous low, and I think they totally underestimate the risk. I show a graphic for that in a second. Here we have the graphic. It's numbers from 2018 and shows the share of gold among the total financial assets is at 0.51%. I cannot believe it. It's still that low.
As you see here, gold as a percentage of global financial assets of 320 trillion is just 1.6 trillion. And of course it's minuscule, and silver, and that's 0.5%. I mean, silver is just a fraction of that. Silver is so small, you can't even see it on the graph. So that's, and if you compare that then to the trading in gold, as I said, which is twice that trading in stocks, and then you realize that gold is absolutely, no one understands gold today. But you know why? Because people have made so much money in all the other asset classes here. in equities and in property, and therefore for them gold is not an alternative, and still all stock markets are on a high. Nobody fears anything, because every time we've had a downturn in markets, investors have always been saved by central banks. So everybody expects that to happen again. I think 2006 to 9 or 7 to 9 was the last time that the market will be saved by central banks, because I think this time it will fail. They will print unlimited amounts of money next time also, and that's going to happen in the next few years. But this coming time, it will have no effect, because of course it shouldn't have any effect, because you can't solve a debt problem by printing more money and issuing more debt. So I think this time investors will be surprised because they will start losing big percentages of their assets, stocks and bonds and property when the fall comes. And then, of course, at that point, people will start investing in gold on a bigger scale, and we will see the 0.5% of world financial assets go to maybe 1% or 2%, and even that would be a massive demand for gold that the market couldn't meet, even a small increase like that. And that will obviously push the gold price up substantially. But remember, we're not looking at gold from the point of view pushing the gold price up or gold going up in value. We are holding gold to insure against all these risks that we're talking about. So it's for wealth preservation purposes, not for the purpose of it going up. But the effect, or what's going to happen in the world, is that gold will go up. And gold will go up substantially, and more than any other asset class over the next 5 years or so, 5-7 years maybe.
I think finally gold will be the so-called last man standing. And if you compare it to the other assets, they are in the newspapers and in the TV all the time. If you go to stocks, they are valued in fiat money. They depend on company gains or profits, and they are also subject to dangerous geopolitical situations, which what many people do not consider. Then you have the bonds, of course. They will finally become worthless because of state default. Then the cryptos you mentioned at the beginning, I do not consider them a real alternative. They are probably a more intelligent created fiat. And you have real estate. The real estate was not even contained in this number of the financial assets. There were real estate not contained. If you include them, then the share of gold from the total wealth is even smaller. So I would even say that to have physical gold in this global dangerous situation, it's a question of to be or not to be, right?
Well, yes, it is. But, we have to remember that it is just a few privileged people who have some assets or funds to invest in gold that can protect themselves. The majority of people will not be in that position. The majority of people have big debts, and they will not protect themselves. But for the few privileged people who can afford to, and I always say you don't have to buy for big amounts of gold. You can buy every month for 1 gram of gold. 1 gram of gold is $40 or 37 euros. So everybody can afford that, and if you do that every month for a longer period, when you get the hyperinflation, which of course the Germans have seen not long ago during the Weimar Republic, the Argentinians and the Venezuelans are seeing now in a major way. Anybody who had bought just a gram of gold in Venezuela would today be wealthy. I know over not just 1 gram, but over a period of time, would just not just be wealthy, but being able to afford their food. So that's why when we're saying that gold is essential, but gold is essential not just for wealthy few people who have surplus funds. It's essential for everyone. Even just buy a little bit of gold every week or every month. It doesn't cost much more than a packet or a few packets of cigarettes or whatever, a few beers and everyone can afford to buy a gram every now and then. And that, if we get the hyperinflation, which I'm sure we will get, that's going to save you.
Egon, let's hope that the people use the time that remains to focus more on the important things, not on cigarettes or alcohol, but on the stuff that really matters in their future. Thanks for your insights today, and I'm sure the next weeks will be very interesting and also dangerous. And again, I can only say carpe diem, and may our readers and visitors use their time wisely.
Yes, no, you're right. It will be a lot tough at times, but at the same time, you know, put your house in order, do what you can, but then enjoy your life. You know, the world has always gone on, the world is always continuous. It's not going to be the end of the world. It's just going to be a very different world and a tougher world. But you know, the most important thing is to have a group of family and friends and you know, enjoy your life on a daily basis and help others, etc. You know, we're not sure. We are talking about gold because that's an area that we are involved in, but I think there's much more to life than that, and I think people should think about just all aspects of life, not just the financial one, which we tend to talk sometimes too much about, but that's obviously where we have some expertise.
Fully agree.
Thank you, Jan. I appreciate it. It was good to talk to you.
Good to talk to you, and till next time.
Thank you. Bye-bye.
Bye-bye.